is we're in this hyper growth stage right now.
Dave Lee was just on Brighter with Herbert YouTube channel, and he explained why he's so bullish on Tesla stock still. Dave Lee has been a Tesla stock investor for about a decade. I think most of his portfolio is in Tesla stock. The last time Dave shared with all of us how much Tesla stock he owns, it was 95% of his portfolio. And it appears to me that Dave still believes that Tesla stock will at least 10x from here.
There's something called basically the S curve. It's a way to show technology adoption. And early on, you often have a slow kind of introduction period. Oftentimes, this is represented by early adopters are hyping the product, but the mass market does not understand it. There's still some pain points. It's still pricey. They go to other existing options already. As the technology gets cheaper and more compelling, and also as the technology presents an all-in-one solution, and this is presented in a book called Crossing the Chasm by Jeffrey Moore. Basically, the new technology has to be simple and straightforward and easy to use. And once the costs come down where it's just a no-brainer decision, that's when it starts to go up this growth curve. And there's an inflection point, and then it eventually leads to more of a maturity stage over time.
You have innovators, you have early adopters, and then between the early adopters and the early majority, you have the chasm, then you have late majority and laggards. I believe Tesla, when it comes to EVs, now is in the early majority stage because Tesla has crossed the chasm. It's very obvious that EVs will work and that is the future and that Tesla will be able to continue selling EVs. But the opportunity still remains absolutely ginormous in the EV space, so I wouldn't go by that chart when looking at how much more can we make from EVs. For most things in life, I think I usually fall somewhere in between late adopters or the early majority. I'm somewhere right here actually as a consumer and as an investor. The main reason why I did not invest into Tesla stock earlier is because Tesla was not profitable yet. But in early 2019, I looked at it, and to me, at that time, it was obvious that Tesla is going to be widely profitable. I don't like investing into things that are really covered all over with the color red. I like this other color better. So yeah, then I realized Tesla is going to be profitable. That's when I jumped in. Because I am a fairly conservative investor, I don't like losing money. And I believe that it is a very low probability for Tesla stock investors to lose money in the long term if I keep my investment for many years. If my time frame for holding Tesla stock was less than 10 years, then yeah, I would be thinking about this investment a whole lot differently because the risk, I believe, then increases a lot as Tesla stock is so volatile. There has been a 5-year period before where if you held Tesla stock during this time, you would have ended up losing money. And although I only own Tesla stock in my stock portfolio, when my family asks me, Matt, should I buy Tesla stock? I tell them, don't buy any more than what you are willing to lose. And one of them told me, but Matt, I don't want to lose anything. And then I said, don't buy any Tesla stock at all. I know that person could not hold Tesla stock through this insane volatility. I mean, imagine when Tesla stock was down over 40% just this December alone. That person would have freaked out.
Why do certain technologies actually make it all the way right through this growth and maturity stage versus other technologies get stuck and they go into the graveyard? And so there's a lot of kind of philosophy and approaches where, there has to be this amazing product that not just is technologically advanced and impressive and compelling, but needs to be at the right price point, needs to deliver the right value, has to have the right simplicity, and it needs to have the right go-to-market strategy. And so all of these kind of have to come together to make this curve a reality.
Tesla absolutely nailed it with EVs, especially with the Model Y. It's going to become probably the best-selling vehicle in the whole world this year.
4 of these technology, adoption curves put together. And so you have the first one, which is electric vehicles or EVs. You actually have three, I think, major S curves within this one EV S
Mm.
curve. So the first S curve was basically the premium kind of, you know, 70 to $100,000 kind of sedan SUV market that the Model S and Model X were in. And this market, is basically Tesla's, 2012 to 2017 basically curve.
Right here, you can see the Model S and X sales. And over time, they did start to slow down, especially once the Model 3 launched. As you can see, the sales did slow down. And then we had a refresh here, and they are coming back up again. But certainly, Dave is right that within this EV S curve, there are other S curves, like the Model S curve.
Some people thought, oh, this growth is going to go on forever and you're going to have Tesla sell 200, 300,000 Model S's and all this stuff, right? But that's not the reality. Reality is oftentimes these curves, taper off. So the second major technological S curve for EVs or for Tesla has been the Model
Oh,
3
right,
and the
right.
Model Y. And so that's when you see Tesla timed it right when the Model S and X start going into their maturity, that's when they ramp the Model 3 and Model Y right in time.
Model S and X sales probably would have still increased more if Tesla did not launch the Model 3, but Tesla's timing was pretty good. And we saw this huge delivery growth right here when Tesla launched the Model 3. The delivery is more than doubled in one single year, and when we had a similar thing when the Model Y launched. The Y launched in 2020, but the real growth really happened the next year. The exact same thing happened with the Model 3, which was launched in 2017. But in 2017, as you can see, the growth still was not that big, but the next year was huge. With the next generation vehicle, we should probably expect a very similar pattern as well.
They need to learn a lot during this first S curve and get all the technologies down. They need to get the battery technologies, the power management, get safety down, get reliability, service centers, superchargers, get the whole package. And they need to learn enough where they can make the next big step, where their next evolution of the technology will be significantly cheaper and better. If they don't learn enough, then they're not going to make the next product cheap enough and better and good enough. And so that's why you need that you need to wait out that first curve, wait till it gets
Mm.
to that, slowing maturity in a sense before you release this next thing. And the next thing has to be you really have to knock it out of the park.
And that is one reason why we haven't seen the next generation Tesla vehicle yet, because the Model 3 and the Model Y, these two models are still growing so much.
Some people think that, oh, this is going to go on forever. Tesla's going to sell 5 or 10 million, Model 3s or something, or Model Ys. And that's not going to happen, right? Most likely. And what's going to happen most likely is you already see the tapering off of this second major S curve happening right now, right? How many more, 50,000, 60,000, dollar cars can Tesla sell? There's a market saturation point. And so you've already got this kind of maturing of the second major S curve with EVs, with the Model 3 and Model Y.
Dave does have a point, and 10 million deliveries for Model 3 and Y combined alone, that seems certainly not likely. But I think eventually, with costs coming down and the Model 3 and the Y becoming cheaper, I think 4, maybe up to 5-ish million is not out of the question. But that would assume that the price would come down significantly. And now Dave has some thoughts about the Tesla's next generation vehicle, the $25,000 vehicle.
Third S curve is the biggest in a sense because the market is the biggest. Because as you bring down the price of the car, you enlarge your total addressable market. And so when you think that, hey, maybe the Model 3 and Model Y can sell, 2 million a year or even a little more, then when you bring down the price significantly and you
Yeah.
bring it down to like 30,000 or something, you're opening up major new markets. And so that's why, this third generation car could reach over 10 million people, maybe 10 to 15 million, who knows what the exact number is. And there can be very different variations of this third generation car too. It could be a sedan, it could be a small SUV, it could be different, form factors, etc.
There has been some talk before that Tesla may have a unique vehicle just for example, the Chinese market. And that is certainly possible, although that sounds a little bit opposite of what Elon has been talking about recently, especially during the Investor Day. There, Elon said that Tesla would only have maybe 10 models in total.
Is we're in this hyper growth stage right now. A lot of companies, they get stuck in just one market because it's really hard to find the next big thing.
Yeah, because there are so few huge markets that are, let's say, $1 trillion each at least. You wouldn't expect an oil company to develop a search engine, right? And generally, you would not expect an automotive company to be really good at software, or a technology company to be really good at manufacturing vehicles, but Tesla is good at both. And looking at this chart right here, I think the FSD opportunity is quite a bit bigger than what it looks like here. The energy one, I'm not sure it is going to be that huge, but of course the total revenue might be ginormous, but the margins long term, I'm not talking about the next 5 or even 10 years, I'm talking more long term, maybe 20, 25, 30 years. I don't think you can really sustain incredibly high margins for energy for decades and decades and decades and decades, but for full self-driving, I think you can sustain huge margins for a very long time. And I think the AI part right here is actually a whole lot bigger than this. So I went ahead and actually fixed it. As you can see, you can't really even see the EVs here, which are huge currently, but compared to AI, it's going to be nothing. The big question is how much of that market Tesla will capture. And having multiple S-curves like that stacked on top of each other is why Dave Lee is so bullish on Tesla stock. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.